Good morning. Now, I have come with the important topic for income tax, that is computation of salary. So, this is our sixth module. So, the first two modules I have explained the basic concepts of income tax, the basic terms. Who is an SSC, assessment year, previous year, income, features of income tax, exempted income. All those details we have learned in first two modules. Third module I have used for teaching residential status, where we have worked out enough number of problems also. Fourth module was about distinction between capital and revenue. And the fifth module was about incidence of tax. So with that, we have completed the basic introduction and the basic structure for income tax. Now we are coming to the computation of salary, and this is very, very important because I told you salary computation, most of the students will find it little difficult. But you don't have to worry about that. I told you I am going to teach you in a systematic way and in a very simple way, which I have learned this technique of teaching my students at Christ University for different years, and continuous teaching of this subject has made me to teach this subject with more confidence. So I thought this lockdown period, this module will be, and this subject, the entire subject when I'm going to cover with this YouTube channel, it will be really helpful for students all across the country. So that is what the idea. And please, I am requesting you, if you have any suggestions or any feedbacks, please get in touch with me. And I have shared my details also in the every module. I have given the details. My feedback you can give, or you can mail me, or you can put it in the suggestion box, anything like that. You can communicate to me so that I can improve that and according to the expectations of the students, the viewers. Now it's the lockdown period. I'm not meeting the students face to face. This we are using through the online channel. So if I'm meeting the students, then and there itself they will give the feedback. I'm very free with the students. They have the every right to come and meet me. They have to come and approach me for any corrections or any suggestions. I'm a positive person and I will always accept that, what are all students' views and all. So this same approach I will expect from my online students also. When you will watch your YouTube channel, please get in touch with me if you have any suggestions for improvement, or if you want extra expectations from this module, please tell me. So that will be helpful, and I'm going to start with the computation of salary, where I'm going to explain the basic concepts. What are the characteristics of salary? What is the definition of salary? What all things are included in salary? All this I'm going to explain with this module. So we are starting module 6. So what are the characteristics of salary? Characteristics of salary, you have to remember that the first point is relationship of employer and employee is very important. See, you know that I work for Christ University. When I joined in 1994, I signed an agreement with the Christ management regarding my terms and conditions of employment. What the dress I have to wear, my attitude towards students, my approach towards examination, my salary package, all these details are there. So that is the employer-employee relationship. So I have to abide the rules and regulations, and that salary, whatever is mentioned in that, and time to time revision will be there. Accordingly, I will get that. So that is the first thing you have to remember, that relationship of employer and employee is important if I have to call something as salary. Say for example, every month I will get my salary. So that can be called as salary because I am getting that salary for doing the work for Christ University. So that is the salary because there is an employer-employee relationship. At the same time, I want to tell you that sometimes I'll get invited as resource person. So what I will do when I'm getting invited as resource person, maybe to conduct an examination, maybe to take some class, maybe to give some guest lecture. So what I will do, I will go and do that work for that college or university, wherever they are calling me. So they will give me some remuneration, but that remuneration, it's not salary, because there is no employer-employee relationship with that organization. My relationship is with my university where I am working. So that is the first point you have to remember. Relationship of employer and employee is very, very important to call something as salary. So that is the first thing you have to remember. Second point, salary from more than one employer. I want to tell you that we have a morning batch of BCom students. Those students who want to do CA, ICWA, company secretary and all, they will come and their class starts at 6:30. So most of the professionals, they will have their own organization, their own consultancy firm, or they will be going to different organizations to teach the students. So sometimes they will be getting from, they are working as part-time employees. So they will be getting salary from more than one organization. So you have to remember that. Then also it will come under salary if they're taking part-time salary. Only thing is that they are not in full-time employment, but they're getting salary from different organizations. 2-3 hours they will work for our university, 2-3 hours they will work for another university or college, like that. They will be going to different organizations. So there and all, they have entered into agreement with that organization, and they will get salary from 2 or 3 organizations. So that is the part-time salary, that also we will tax under this head of income. Next point you have to remember, salary from present, past and prospective employer. Now you know that salary from present employer. Past employer meaning where you were working before. Prospective employer meaning this also you resigned and you are going to join another organization. So here it's very important. You have to remember that. See, for example, this lockdown period, most of the people, they lost the job or salary cut they are facing. So you have to remember that if a person was working before lockdown, he was getting some salary. Last year he was working with an X company. He was getting the salary. So January to April, May he worked there. Then June he started join this company Y. So this is X was past employer, present employer is Y. Now due to the lockdown, now he's asked to resign. Now he's looking for a job and he got another job in company A. So that means X is past employer, A is present employer, X is past employer, present employer is Y, and A is the prospective employer. So here you have to remember that anywhere in the financial year, from where all sources he got salary, the condition you have to remember, it's the employer and employee relationship. So it will be considered as salary. So whatever this employee got from company X, company Y and company A will be taxable, because all these organizations he worked in this financial year. So salary from present, past and prospective employer will be taxed under the head salary income. Now tax-free salary you have to remember. Some organizations, if they want to retain a very qualified person, very known person, so what they will do, the organization will offer them tax-free salary. So that meaning the employee will be getting gross salary and there is no tax deduction for that, because the organization is paying the salary due to the employee. So you have to remember that the employee has to pay the tax on the gross salary. That arrangement for paying tax with the organization is different. Organization may be paying tax that he can TDS. If the organization has paid, he can claim that at the time of filing the returns. So tax-free salary meaning you have to remember that sometimes to attract very capable people, very talented people, very known people, they will announce this tax-free salary. So when you will hear about the term tax-free salary, you have to remember that the organization may be paying his tax, but the employee, when he is filing the tax returns, he will be showing the gross salary. Though the TDS will be met by the employer, that and all he can show it in the while filing the returns. Now, next point is salary received as member of parliament. You have to remember that, see, member of parliament, they will get salary. That will be considered as income from other sources. Now, if you have listened to this explanation carefully, you know the reason why it is not taxed under salary. The reason is there is no employer-employer relationship for a member of parliament. Member of parliament is elected for 5 years. His term is only 5 years. So that is, he is not signing the agreement with the central government when he is elected as the member of parliament as an employee of central government. I told you my example. When I joined the organization, I signed the agreement. Job contract I signed with Christ University Management. Whereas in the case of member of parliament, whatever salary they will get, it will be taxed under income from other sources. But you have to remember one thing, important thing. Any allowances they will get, that will be completely exempted from income tax. One example I will give, it's the constituency allowance. You know that member of parliament, they have to work in the constituency from where they got elected. So constituency allowance meaning they may get a vehicle, office vehicle. They will get a police person for the protection. They may get an driver, petrol, diesel. They may get a house for stay, everything, all the allowances they will get, all the allowances will be exempted. So coming to the next point, receipts from persons other than employer. So this is also important. You have to remember that receipts from persons other than employer. See, for example, now this lockdown period. Imagine a person who can afford the expensive treatment. He got affected with COVID-19. He is going to a private hospital. So this is not possible for teachers and all. This will be possible for professionals like doctors, lawyers, consultants, anything their skill they can use in performing the duty. So that means if a doctor, he's going to the best hospital in the country. So that means he can afford the private hospital expenses. You know that it's very expensive. So as once he is recovered from that COVID-19, what he will do? If he is satisfied with the doctor who treated him, he's a known doctor, he's very capable. So what he will do? He will give something other than whatever the hospital fees or the hospital bill, some token of love or appreciation, he will give a gift, maybe a cash gift to the doctor. So that will not come as salary, because that will go to income from other source only, because there is no employer employer relationship between a patient and this doctor. The doctor's employer employer relationship with the hospital he is serving, not with the patient. So the patients and all, they may sometimes get gifts either in cash or in kind, but it will not be treated under salary. So I think you got the distinction. Next point is place of accrual of salary income. Place of accrual of salary income is very, very important. See, when we are working service in India, it is considered as Indian salary. See, for example, an IT person is deputed to US for 3 months. Now he will get salary. So usual rule is that up to 3 months, when what they are getting the salary in a foreign country, it will be considered as Indian income only. If it's beyond 3 months, they will consider it as foreign salary. So that is the thing you have to remember. Place of accrual. Wherever you are rendering the service, that place will be the place for taxing the salary income. One more thing I want to tell you that, see, I worked in India and I'm getting Indian salary, I will be filing tax returns for my Indian salary. Imagine after retirement I'm going to settle in a foreign country. So whatever I'm going to settle in a foreign country and I will be getting my pension in a foreign country. So whether it will be considered as a foreign income or an Indian income, you don't have to worry about that. That's an Indian income only, because my pension I am eligible only because I served in India. So that is why I'm getting pension. Though I am living in a foreign country after my retirement, I'm getting my Indian salary. Indian salary or the Indian pension I'm eligible to get in a foreign country. So that is the place of accrual is where you are doing the service. Next point you have to remember, deductions made by employer. I told you it is very, very important. When you are getting salary, however you want, you can spend the salary. Application of income is not the consideration of the income tax department. I told you when I'll get my salary, I may have to pay my housing loan, vehicle loan. So many other payments will be there. Insurance payments will be there. LIC payments will be there. Group insurance will be there. All these payments will be there. So from my gross salary, the employer will deduct all this, and then only I will get my net salary. So even TDS deductions will be there. Tax deducted at source will be there. So after all this only I will get my net salary. Now you have to remember that, see, whatever deductions are made by employer, it's not the concern of the income tax department. Whatever your gross salary, you have to pay the tax. So that is the thing you have to remember. Deductions made by employer, they have every right to do that, and every organization will be doing that. But taxable salary will be the gross salary. When we'll do the problems, I will teach that. See, when we'll sometimes in the question you will get net salary, but we cannot do the calculation with net salary. You have to convert that into gross salary. How you convert? What all items deducted will be mentioned in the question. You have to add back all that with the net salary, then you will get the gross salary. Then from gross salary you will start the calculation. Next point is salary or pension received by United Nations organization employees. It's not only United Nations, World Bank and IMF are also correct. So there, whatever salary or pension received, it's completely exempted from tax. Here I want to quote this example. Our Puducherry government, Dr. Kiran Bedi, worked in IMF as police advisor, maybe some 10 years or 15 years back. So at that time, Ma'am's monthly salary was 10 lakhs. I used to remember that when I used to read that article in the newspaper. So that first IPS officer from our country got used to get fascinated by that. So that I used to read about ma'am's work and IMF police advisor. So all the allowances they used to get. So everything used to be exempted. Otherwise, you remember Shashi Tharoor worked for United Nations organization. Salary or pension, whatever that Mr. Shashi Tharoor is getting, it's completely exempted from tax. So these are the advantages of working in good organizations. Salary, pension, all the allowances, any number of travel with the family members or family members can travel, the bungalow, the car, the petrol, the diesel, the workers, the orderly, cook, gardener, you name the item, you will get that. But everything will be exempted. Next point you have to remember salary received by teachers or researchers from SARC countries. There is a rule that just for 2 years. If a person from as a teacher or a researcher from any SARC country is working in India, for 2 years their income will be exempted. Salary will be exempted. Next point you have to remember salary as partner of partnership firm. You have to remember I told you when I taught you the concept of income, I told you that when you are getting a partner is getting a share of profit from partnership, it is exempted for the partner. The reason is that in our country, the rule is that there is no double taxation of income. Partnership firm has paid tax for the entire profit they made. So again, if the partners, when they are getting a share after paying the tax by the partnership firm, it will be double taxation. So share of partnership from partnership firm to the partners is exempted. But there also I told you that salary, commission, allowances, everything, whatever they will get from the partnership firm will be taxable, but it will not come under salary. I hope you know the reason why it is not taxed under salary. It will go to business or profession, because for a partnership firm, employer-employee relationship is not there. So that is why it will go to income from business or profession. Next point is you have to remember that payments received by legal heirs of deceased employee. See, sometimes when they serve the organization, they may die while in service. So what they will do, organization, their legal representatives, maybe the wife or the children or husband or anybody, whatever, whoever the legal has recorded to the as legal heirs to the organization, they will call them and they will give that amount, whatever is due to the deceased employee. So here you have to remember that it will not be considered as salary because the employee is not there where he got a contract with the employer or the organization. Whatever the legal heirs will get, it will be treated as family pension. It will not be salary. Next point, payment received after termination of employment. Sometimes you remember that this is the lockdown period. Most of the employees, they lost their job. Some employees, we are hearing the news that they lost the job. So after terminating the employment, sometimes when the company will revive after lockdown period and they will start making profit, they may want to compensate the persons who were terminated during lockdown. So whatever they will get as salary from that organization where they served, that will be considered as salary itself. Next point is application of salary. Application of salary, I told you, however you want your salary income, you can utilize that. But always you will be paying tax for the gross salary and not the net salary. Next thing you have to remember, previous year for salaries is April 1st to March 31st. That is very, very important. You have to remember that it's the financial year. So it will not clash with our assessment year or previous year. Your assessment year is this financial year. 2020 April 1st to 2021 March 31st is your assessment year. Previous financial year is your previous year. April 1st 2019 to March 31st 2020 is your previous year. So previous year for salaries will be the same, April 1st 2019 to March 31st 2020. Next point you have to remember, taxability of salary on due or receipt basis, whichever is early. So you have to remember that sometimes usually private organizations will pay salary on time, whereas government organizations, they may not pay salary on time. So you know that the lockdown period and all, sometimes payments will be delayed. So if salary is due to me, then it is considered as I received the salary. Either I receive on time or yet to receive, whichever coming first. So that will be considered as the salary received. Say for example, May 31st. I am supposed to get the May 31st, that when June 1st or May 31st, Usually I have to get my salary for the month of May. So if I have not got the salary up to 24th of June today, so that is I am supposed to receive that. My receipt basis is either May 31st or June 1st. That comes first. But till it is due, it is not paid. That meaning they will take the receipt aspect for taxing the salary. Because I am supposed to receive my salary. I work for 1 month, I am supposed to receive that. So receipt basis comes first. So that they will take. Next point you have to remember, salary grade or pay scale. This is very, very important. You have to remember that salary grade or pay scale. This we will use for computing salary income also. Just I am giving you an example. See, for example, when you join an organization, see, sometimes when you get the job application letter, you can job appointment letter, you can see that sometimes the value will be 20,000 slash 2,000 slash 30,000. Just taking a value 20,000 slash 2,000 slash 30,000. That meaning the joining salary will be the first value whatever is mentioned, that is 20,000. When you complete 1 year of service, this 2,000, the value between 20,000 and 30,000 is 2,000. That will be added to your salary. So when you complete 1 year of service, next year salary will be 22,000. When you complete when you will enter into second year, the salary will be 24,000. This will continue till you will reach 30,000. When you reach 30,000, they will release the next salary grade or pay scale. So that is the advantage of salary grade or pay scale that we will be using while we are doing the problems for salary computation. Next point you have to remember, advance salary. See, sometimes organizations, when a person is hospitalized or when a family member is sick or any natural calamity or anything like that, sometimes if they want to help the employees, some situations they will offer advance salary. So here what they will do, advance salary, whatever is collected, that also will be considered as salary. See, for example, if an employee in our organization is getting treatment for cancer, so they will approach the management, we don't have money for treatment, so 1 year advance salary you give it to us, we are going to utilize for salary. So that advance salary also will be taxed in the year of receipt. So this year we are getting that, we are collecting salary for the next year, next financial year, 4-5 months in advance. So that also will be taxed in this year itself because you have received that salary. Next point you have to remember, arrears of salary. This also you have to remember, arrears of salary meaning, see, government, this is possible for government employees. So government will appoint every 10 years a pay commission. See, 2006, 2016, now 2026, every 10 years they will appoint. So salary revision they will recommend. Now take the example 2016, central government has appointed a pay commission. So that they have recommended increase in salary. But we got that increase of salary in 2019 January only. That meaning 2016 12 months, 17 12 months, 18 12 months and 19 12 months we have not got the increased salary. So once the new salary is paid to the employee, what they will do, they will calculate the arrears of salary which we were supposed to get from 2016 January. Now you have to remember that arrears will be paid to the employees as installments. So when we will get that arrears of salary, so this year we are going to get the arrears of salary for 2016 pay commission, whatever the increase they have suggested. So that meaning that will be considered as salary in the year of receipt. See, what I am supposed to receive in 2016, 2017, 2018, 2019, everything I have to pay tax because this financial year I am going to get the salary arrears. Now, next point you have to remember, salary in lieu of notice. Salary in lieu of notice. See, sometimes if you want to terminate an employee or if you want to give your resignation, they will say that we are serving the notice period. Usually notice period is for 3 months. You have to remember that. See, when you are serving notice period, 3 months. So they will pay you the salary for 3 months also. So that you are going to resign from the organization. You have made it clear to the management. We are going to resign. But whatever salary in the notice period, when you serve the organization, whatever you will get, that also will be considered as your salary, though you are serving the notice period of 3 months. Now we will come to incomes chargeable as salary under section 15. 3 points are important. What all will come as salary? First one is salary due from an employer or a former employer, whether paid or not. See, I told you when I explained the characteristics of salary, salary is taxed on due or receipt basis. whether you received it or you are going to receive. I told you if salary is delayed, then receipt basis comes first. When you complete 1 month, you're supposed to get the salary. It's delayed. So either due or receipt will be the basis for charging salary. So that is the first point. Second point is salary paid or allowed to him, though not due before it comes due to him. That meaning same thing I told you. See, my May salary, if it's not paid till 24th June, so what they will do, what we will do, it's supposed to get that. I'm supposed to get that. If I'm not getting in June, I'm getting in July or August, then also it's due to me. I have to pay tax for that. I cannot say that it was delayed. See, when it's due or accrual basis, I have to pay tax. Arrears of salary, I have already explained. Arrears of salary also will be included in salary. The year of receipt, that year they will be considering it as arrears of salary. But we can claim certain exemptions. Actually, section 89, subsection 1 will give some arrears, some exemption, tax exemption when you're getting arrears of salary. We don't have to deal about that, because if the entire amount we have to pay tax, we will not get anything as arrears. So government is giving some relaxation when we are getting arrears of salary, some tax exemption that is mentioned in section 89 subsection 1. If that will not come for your explanation, so that is why I am avoiding that. Now, what is definition of salary? This section is also important, section 17 subsection 1. As I told you, whenever section is mentioned in the PowerPoint presentation, you have to remember that if you get a 2-mark question, you have to quote the section also. See, only wherever it's important, I have used that. So definition of salary, you have to learn for 2 marks with the section. Section 17, subsection 1. Now, salary includes the following amounts received by an employee from his employer during the previous year. First one is wages. So wages meaning there is a difference between wages and salary. See, for example, are the cleaning staff in our organization. So they will be paid, if we take the example of 500 rupees per day. Imagine they are getting for the days they work. That is why it's not called salary. Salary meaning it will come as a monthly package. This is daily wages. Casual workers working for the organization. So that wages also will be considered as salary. Though it's not a monthly package, if they work for 30 days, 500 into 30, 15,000 rupees will be their monthly salary. Like that we will calculate. Next one is any annuity or pension. You know that after you serve, your working life is over, then when you are doing the service, while in service you will be getting salary. After service, after retirement, what you get will be your normal pension, that will be taxable. This computation of pension we have to learn in detail in the salary chapter. Gratuity is the next term. You have to remember that gratuity is the recognition by the management for number of years you are working with the organization. So you have to remember that gratuity, some private companies will give, some public companies will give, government will give. So that lump sum amount calculation, any gratuity you are receiving. See, once you leave the organization after serving 5 years of service, then also the employee will get gratuity. So gratuity can also be, sometimes it is taxable. See, for government employees, when we are getting gratuity after retirement, it will be completely exempted. But while in service, if you are getting gratuity, see, for example, a person worked for 5 years and he is resigning and joining another organization. So that gratuity will be taxable. While in service, if you are getting gratuity, it will be taxable. After retirement, it will not be taxable. Now, next is any fees, commission or perquisites or profit in lieu of salary received in addition to salary or wages. This, if it's a prime minister, president. Now you know that presidential bungalow is 340 rooms. Yeah, so this prime minister, they will get extra security. They will get the office vehicle. They will get the fuel, petrol or diesel. They will get police protection. They will get the cook, the gardener, the palatial bungalow. Everything they will get. So many attractions will be there along with salary for some key positions. Maybe member of parliament, opposition leader, MLAs, MPs, IFS officers, IPS officers, all this. So sometimes they will get extra fees for that. Sometimes they will get some commission. See, for example, a marketing person for an organization, he will get commission. When you have learned accountancy also, you have learned the 2% on turnover. That is the commission. Then perquisites. Perquisites meaning like Cadbury perquisites, extra benefits, whatever they are adding to the position. Bungalow, fuel, gardener, driver, all these are the perquisites. Or profit in lieu of salary. Profit in addition to salary. maybe commission, bonus, anything they will receive. So that is included in salary or wages. Any advance of salary, I have already explained. If you are collecting advance salary from the employer, it will be taxed in the year of receipt. Leave encashment or salary in lieu of leave. Leave encashment I have already explained in the basic concepts, that is earned leave can be encashed. See, a government servant, leave encashment allowed up to 300 days. That meaning if you have 300 days of earned leave at your credit, then 10 months salary you are eligible to get. That will be completely exempted from tax. So if you are not able to keep 300 days, see for example, if I am able to make only 240 days of leave encashment at the time of retirement, so 240 divided by 30, so that 8 months salary will be, I will get it as exempted salary. Whereas government will announce while in service, those who are in need of money, they can encash your leave. You remember lockdown period, that announcement was there. Immediately with the financial crisis, central government has cancelled that leave encashment which was allowed. They have withdrawn at the time of lockdown with the financial crisis. So you have to remember that while in service, if you are encashing or leave, it will be completely taxable. It will be added to salary. You don't have to worry about this now. We are going to learn this as a separate component. Next point, balance at credit of an employee participating in recognized provident fund. See, recognized provident fund. See, there are different types of provident fund. Recognized provident fund, statutory provident fund, public provident fund, and unrecognized provident fund. So this is the next module I am going to explain, the types of provident fund and the tax treatment for that. So here you have to remember, if an, see when this transfer will happen from, see URPF, unrecognized provident fund, and recognized provident fund are related. So these 2 points combined jointly I am going to explain. See, the concept is when they will start an organization, maybe starting a private company. So they employ management, they want to give it to the employees provident fund. So they will start provident fund, and you know the concept, how the provident fund concept will work. Employee will be contributing certain amount, employer also will be contributing certain amount. So this fund will get accumulated, and at the time of leaving the service or at the time of retirement, they will get this accumulated amount as savings. Now you have to remember that when they will start the provident fund, if they have to, they can start it only as unrecognized provident fund. So when it will become recognized provident fund is, they will get the approval of income tax commissioner. Sometimes it may take months, sometimes it may take years to get the approval. So this, when you start it as URPF, unrecognized provident fund, when you will get the approval of the income tax commissioner, it will automatically become recognized provident fund. So whatever balance is credited so far in the unrecognized provident fund will be transferred to recognized provident fund. So that is why it is called transferred balance. This is very, very important for 2 marks. What do you mean by transferred balance? Most of the students will get the wrong answer. So you have to remember that transferred balance meaning the balance transferred from unrecognized provident fund to recognized provident fund when they will get the income tax commissioner's approval. So this is the basic explanation about salary chapter. Now I want to tell you that the basic concepts of salary I have explained. So salary is a lengthy chapter, and each computation I have explained as different components. So I have to remember that. Now the next module I am going to meet you with provident fund. So provident fund I am going to explain the types of provident fund. I already told you there are 4 types of provident fund and the tax treatment for that. So types of provident fund will be the next module, and this module I have covered the basic concepts of salary. What are the characteristics of salary? What is the definition of salary? What all are included in salary? So this you should be thorough with that when you have to do the problems. So I hope it's clear to you, and as I'm telling you, you have to give me a feedback. So then I will get the encouragement to give that lecture more live, and I can include my examples. What are your expectations? We have not met each other. So it's totally different experience for me. So this lockdown, let me experience this, the love and warmth from all the students across the country. So that will be a great experience, and I'm looking forward to that. Thank you. I will see you with the next module, that is the Provident Fund.